Hi, Tony Sycamore here, Senior Market Analyst at IG in Australia. US equity markets finished higher on Friday night, led by the Russell 2000 as investors chase small cap stocks which are highly leveraged to Fed rate cuts and that have significantly underperformed the broader market in 2024. The assassination attempt on former President Donald Trump has mixed implications for Wall Street. While large fiscal deficits will likely continue under Trump and are supportive of equities, they will also likely lead to the headwinds of higher inflation and higher US yields. In addition, the Trump administration is expected to increase tariffs on China, which raises the chances of a damaging trade war. The weekend events have also introduced an unanticipated layer of uncertainty in the lead up to the election, which may cast a shadow over the US economy for the next 3.5 months. Let's take a look at the charts of the Nasdaq and the S&P 500 to see where they are as we start the new week. Okay, so this first chart is the weekly Nasdaq, and what you can see here is that I've highlighted the formation of a possible loss of momentum reversal candle. We've seen a few of these over the past 4 weeks, but what this actually is, and we need to remember this, it is the setup. There is no trigger until you see some downside follow through below the lows of these weekly candles. So what I would need to see to give us increased confidence that potentially the spillover of the rotation into the Russell, into the small caps, and out of the tech stocks is cascading into a deeper pullback for the Nasdaq, I would need to see the Nasdaq break below this weekly low coming in around 20,160-ish. And I'd also like to see it take out the highs from these two reversal candles from a few weeks ago. So below 20,000, and that would start to increase confidence that we're going to see a deeper pullback. In terms of where the pullback could get to, well, look no further than this uptrend line coming in around 19,400, which is drawn from off this April low. So that is our pullback scenario. We need to see the trigger start to, i.e., essentially some downside follow through to trigger that pullback. If that pullback trigger is not evident this week, then we can potentially see another green bullish candle. So all eyes on what happens here in terms of the price action around this weekly reversal candle. It could also see, if we were to see another green candle like this, it could, of course, see a push up to 21,000. So it's going to be a very, very interesting week in that respect. When I look at the S&P 500 on the daily timeframes, you can see a similar pattern here. There has been a sequence of higher highs playing out with the S&P 500. It's been in absolutely amazing upside form. And there's a little bit of a reversal candle forming here on the daily candle from Friday. But again, this loss of momentum, this potential reversal candle means absolutely nothing until we see some downside follow through. So if the S&P was to break below 55.50, well, then your next stop becomes this support area here, horizontal support and uptrend support coming in around 54.50. But once again, as a reminder, these potential reversal candles don't mean anything at all until you see some downside follow through. So please keep that in mind for this week. Thank you for listening and have a good week ahead.